During Monday's trade, the markets did exactly as you would expect, selling the call resistance and buying right off the support. So what's the next move for the biggest stock market in the world? In today's video, we talk about that along with a glitch that almost caused everybody to be able to buy Berkshire Hathaway stock at extremely low prices. Meme stocks are back, but for how long as Roaring Kitty actually unveils his new positions? And of course, the US dollar drops right on time for late cycle investing. So where are we right now as investors and traders in this market condition? Well, one thing's for sure, if you keep an abundance mindset, like we always talk about on this channel, there might be some opportunities on the horizon, and it looks like oil is heading for one of those. Let's get into discussing stocks, commodities, and cryptos together today. There's a lot of good stuff going on. Well, welcome back everybody to The Daily Show. My name's Tom, and as always, we're going through the macro, the data, the lead indicators, and everything we need to know as traders and investors in the market. If it's your first time here, subscribe and smash that bell icon, especially if you want to educate yourself better on why markets flow the way they do and where is the money going right now. Let's discuss the idea firstly of the macro, the top-down data analysis of where we are in terms of the cycle and what sentiment seems to be doing on Wall Street. So straight away, year-to-date return so far, pretty good. When we put it in a category of plus over 10% for the year, you'll notice that June returns can be actually pretty good as well. Almost 70% of the time, we're higher by the end of the month. And for the rest of the year, it bodes very well with an 84.2% statistic. But is this the way it always is? Well, a lot of it will have to do with the VIX as well. And you might say low VIX means possibility of extreme volatility on the horizon. But do remember some of the greatest bull runs of the last 20, 30 years have been during low VIX environments. It usually means it's calm, and it means that we need to be looking at rotation, which we do a lot on this channel because rotation will give you superior performance. So where are we right now? Well, we could be in the beginning of a low VIX environment, basically where it's kind of like a buy anything, but really it's a buy certain particular sectors of the market. And we'll need to be on the outlook really at more the options market. And in particular, I think interest rate tantrums that could be coming later on this year. Does this make sense for where we are in terms of bull market cycles? Well, if we're in a super cycle, which it seems like we are right now, similar to ones that we've seen before in the 20s, in the 40s into the 60s, and of course, 82 to 2000, which was the dot-com boom near the end, well, you could argue that we're in the AI infrastructure boom right now. And as we've seen on this chart before, I've already detailed that we are not in the same type of parameter similar to the 20s. In fact, we're actually tracking very similar to the ones from the 2000s and from 1968. Now, in both cases, what you're wanting to do is you're wanting to make sure that we are not too far along when you're starting to invest, trade, or swing trade, any of these types of things. And as of the updated chart here, you can see in May, we are still not at the median duration of an overall bull run. Now, this becomes important because, of course, there are some of you that are investors, some of you that are swing traders, and some of you that are day traders out there watching the show right now. A day trader doesn't really care too much about this, but you can remain a little bit more biased towards the bull side due to median duration being between 31 and 33. An investor is going to say, I'm looking to buy the dips, which we've been discussing a lot recently. And a swing trader is going to say, I'm going to remain mostly, relatively speaking, bullish, but I'm going to look for sector rotation and understand late cycle investing better. And that's something that we break down a lot here on the daily shows. So it's, of course, something we do track. So when we're talking about repeatable cycle setups, late cycle setups, or anything else, just a reminder, I wanted to show you guys how we played out with our share over on X. If you're ever interested, of course, we always update our charts at the moment for the S&P 500. And this one was a real doozy because not only did that 5,200 last week find buyers, but then we went straight into the call resistance and bought right off the 52.45. We'll talk about this in great detail soon, but do remember to follow us over on X, as this was just a case of showing how repeatable these particular actions are. And the main thing here is that this is a repetition setup. In fact, it is one of the setups that I use mostly in our day trading masterclass. If you're ever interested in finding out more about how you can also use that throughout equities, commodities, and currencies, check out the links in the description down below. All right, well, let's talk about sentiment because, of course, this is going to be a fairly important factor. Are we super bullish? Are we super bearish? What are some of the biggest banks claiming the markets are doing right now? Well, you'll notice there's a lot of neutrality going around. Here's one of the Bank of America global research reports that show that we're not a standard deviation above or below in terms of extreme bullishness or extreme bearishness. Now, this becomes important when we think about it when we go from the 90s perspective. Let's say that we are similar to the dot-com boom, which I think in many ways it is fair because we are in a new technology reign, AI. And of course, ChatGPT arguably started around here. So we are basically at a point now where we're starting to ramp into the AI revolution. Now, what have we not seen so far? As I mentioned several times, we haven't seen IPOs. So generally speaking, it could mean that there is more on the horizon for the AI run, and that while that might be pulling along a whole bunch of sick stocks in the market, it is important to note that this is what Wall Street will be chasing. And while central bankers do nothing about fighting really inflation in the proper ways that we've talked about several times, you've got to keep your mind open to the current price action bullishness. So what about the Bank of America bull bear indicator? Well, of course, it's right smack bang down the middle right now, incredibly neutral, and we have not seen extreme bears or extreme bulls for quite some time. Last reads we got for the extreme bear side was October of 2023, and of course, funnily enough, October of 2022. Notice a bit of a synergy there. Yeah, it was literally the exact same month. And that's because September and October do tend to be the weakest months of the year, even in years such as this, which of course is an election year itself. What about some of the other problems out there? A lot of people are complaining about housing affordability, and rightfully so, although I would say that the US is still cheaper than some other countries out there. And you can see it's rock bottom at this point and not necessarily getting any better. Well, as I will reveal in an upcoming video, it's actually going to get worse. And the reason why is because basically equity is getting unlocked inside of properties in the US. And what this will end up owning is that we will have double mortgaging. And double mortgaging will end up creating larger debt and bigger problems. Now, funnily enough, if you create larger overall debt in high inflation, what could that do? It could continue to expand the economy. And it's a very interesting concept and struggle that we will need to face over the next 6 to 12 months, probably leading into something that I think will be quite bad on the horizon. What do we expect in terms of core inflation? Well, according to Goldman Sachs, they expect inflation to cool. I don't think they're going to be doing enough about it. Again, if we continue to see double mortgages, then that's going to be a big problem, I think, for the economy. So I would expect it to moderate between the 2 to 3%, and that we have not necessarily dealt with inflation correctly yet. See shelter, see wage increasing, and of course, some of the other problems that have been in CPI recently. What about some of the large dark pool activity? Before we get into our S&P 500 analysis and the options levels that we've been looking at, take a look at this one. Someone sold big time twice now on GameStop. And of course, Roaring Kitty revealed his large position and revealed that it was pretty much around price as of Friday. And then it ramped straight back up. Now, as I've always said on this channel, one of the things about GameStop, which we'll look at later, is you've got to be in early. And as we actually put in our videos last week, we saw a sign of volume increasing and breakout before this actual event occurred. Now we've seen two huge bubbles which signify massive volume analysis. So could it be over as quickly as it started? It's possible. We'll have a look at it a little bit later on and talk about some of the key levels. Nvidia, also a huge position. Obviously, it ramped back up after this one, and we're still in that kind of stuck between 1150, 1100 space. So we'll look at that very, very soon. But still want to talk about it. And QCOM, of course, with massive transactions all the way through the current price action. So let's take a look at rotation right now. And it does seem to be all over the place, but there are some glimmering light hopes. And one of those has, of course, been solar, since we saw the government basically add tariffs onto the solar industry. Metals have been doing the best over 5 days. Utilities continue to do strongly, which is a late cycle style investing idea. And when we look at the last 24 hours, it was semiconductors led by Nvidia, biotech benefiting mostly from, of course, rates actually coming down. And then when we looked at it as well, we had energy, which is definitely helping the case for inflation kind of going away, and KRE, regional banks that were getting hit. Now, if regional banks continue to drop, that could be a big problem on the horizon. So it's one of the things that we are watching most closely. Regional banks, financials, home builders, remember we do track all of those, and the energy sector. Well, this is something we'll talk about in today's video, whether it's an opportunity. Now, what happened over the last 24 hours? Well, the bulls were basically in control by the end, but not in the morning. So the market's actually sold from the 5,300 high where all the calls were. They expired worthless, by the way. And the market came down to exactly where we expected buyers to come back in. It's actually an incredibly repeatable setup and very, very nice. Overall, the delta was positive, which we can see we've now had 2 days of positive delta. And I've got to say, it does bode well for the overall bull case scenario. And the reason is quite simple. When we take a look at it on a daily, such as here on the futures, you can see it's a big rejection wick. And you never ignore wicks. Now, could the market come underneath this and close? Yes. If that happened, would that be pretty bearish? I would say yes, it would be quite bearish indeed. But it does seem less likely. And when we look at the options, you'll see why. So what's happening? Well, it's very important for the bulls to take a new high, to push through to a new high, get past 5,300 and enter into super positive gamma situation again. Now, from that point, if we get through 5320, we're more than likely going towards 5,400. And the reason is quite simple, and it has to do with the options themselves. Just a quick reminder, let's have a look at the smaller timeframes before we look at the options. And you will notice that it was pretty much a thing of beauty with the markets chalking up this resistance and then just basically falling through the floor straight to the level we expected. A lot of you guys messaged me today saying that was pretty damn sweet level. Well, yeah, but like anything, it's just if you find edge, you know when to execute. And that's one of the most important factors. Now, where are we right now? Clearly, we're at a resistance, but let's take a look at the options. And you'll see here that 5240 is now super stacked with puts. No wonder it bounced off that level. Everyone trying to short off that zone. Big mistake. I don't know why anyone tried to do that. And at the same time, we have heaps and heaps and heaps of calls all over the place. So as long as the market can remain bullish through the next sector, you can see here there's going to be probably a little bit of hedging that some of the biggest riders need to do. And that's going to help push that positive gamma situation. So you've got to like what you see in terms of the options on the charts. That obviously is helping the bull case scenario. And it continues to help it as well when you go to the next session, which is obviously the 5th of June. Again, 5265 having a bit of puts, 5200 being filled with puts, and huge amounts of calls everywhere. It will be reliant on the overall market pushing up, but as long as that does end up occurring, positive gamma all over the place, and that should help to, again, solidify that big wick that we saw over the last 24 hours. What about the CTAs? Well, commodity trade advisors or momentum-based funds, they've been kind of selling to neutral recently. So I'd say neutral on the NASDAQ, neutral on the S&P 500. And when we look at some of the other markets, it's an interesting one because Brent actually we saw increasing. Of course, now that's dropped off. This is about 1-2 days delayed. So we'd have to expect that we've got kind of a neutral position by now in the CTAs. But it's interesting they're still so high in positioning, even though Brent's falling off. And it does give us an inkling that the next big bull phase for Brent could be very, very nice. Gold upticked a little bit in CTAs. Overall, still waiting for what's going on with the dollar, which we'll look at. But as you know, I'm a big bull on gold. If you're looking at the next 6, 12, and 18 months, I still think we're going to go to $3,000 an ounce. And I've said that quite a few times. GameStop situation, options, where are we? Well, as you might know, spot price closed under 30. And of course, it needs to hold above 30 to really be, I guess, a threat to, let's say, some of the biggest riders. $30 is the most written strike. We've also got around $25 being a written strike. The problem with us as retail traders is we're often quite predictable. Every $5 seems to be what we like to strike off. And look, ultimately, I do think the street will win again here. So it's going to be one of those kind of boom busts, and that tends to be what's happening. Now, a lot of people in the comment section said, Tom, you don't understand what's going on here. To me, I guess I said it from the start of this whole process back in 21, which, I guess we were proven right on. And I'll say it again. It is a point where you have to understand the beast that you are trading or investing in. If you want to be part of the movement and you're prepared to hold for a long time, there will be spikes at certain points. But Wall Street works in a very mysterious ways, and they will try to pressure your money out. So I think that you've got to be aware of your risks. And obviously, I always say, be prepared and make sure that you don't over-lever your accounts. Move over to Tesla here, still stuck between our 170, 175 level and 180. This thing cannot get out. And with all the information coming out about Tesla and IP and all this other stuff, clearly the charts are completely indecisive. They're at an equilibrium, and a breakout, the longer it coils here, remember the breakout's going to be more significant. So if we break to the upside, we've got a lot of calls running through. If we break to the downside, we've actually got a lot of puts running through. So I think we're going to get an explosive move on Tesla relatively soon. Let's jump into the charts. The VIX got crushed again, mostly a positive for stock market traders. Some of the weaknesses, our bonds market indicators starting to definitely show some signs of weakness, and that's starting to actually rise up. Now, this is weird because it usually is a predictor. So it's the probably biggest warning we have at this point, but I don't really have a chart that's telling me on the S&P to be totally freaked out yet. So yeah, we've got a bit of an increase here, but it's still just an early sign. And I think when we consider it with things like home construction, Dow Jones transportation average, and of course yields being stuck within a range, there's not much we can really say about super bearishness. I think at this stage, it's still follow the price action, and the price action at this point still continues to tell us that we need to be bullish in these markets off that 5,200 level. What about central bank liquidity? Both are improving. So again, central bank liquidity mostly neutral for a while now, but certainly not declining anymore. It's actually on the increase. So it shows that central banks are not doing much about the markets. As we mentioned, transportation average is sitting at its demand. So again, no weakness there. Now, where there has been weakness over the last 24 hours has been the US dollar. And we've talked about this quite a lot. We obviously thought this most traded level was mostly to the bear side. We've broken through the 104.26, and we're in the week of non-farm payrolls. Now, this is really explosive because it's all happening before the jobs numbers. And if we take a look at it on a weekly, you can see here this long leg doji or equilibrium level. So if the markets do manage to stick a close underneath 104, so let's say we closed at 103.60, that could really open the floodgates for some pretty heavy selling on the US dollar. Now, that would also suggest that maybe yields are coming down, which could be good for solar, could be good for clean energy, could be good for bio. I don't tend to believe that narrative, even if it does come through, but it may lead to breakouts in those pairs. So basically, the US dollar is right on support right now. It did break to the low side. If it sticks this with a weekly close after non-farms, I would say that there's going to be a big currency switch moving on. Now, if it does end up falling off, will that be good for copper? Will that be good for metals? Well, the long-term answer, let's say the next 3 to 6 months, would be yes. The short term, I'm still looking for a couple of levels to be hit. So copper, we're really wanting this thing down to 450 because I would love to see a 450 bounce up, get past 470, something like that, look towards back in. Now, we first warned over here that we thought it was getting exhausted. I am a bull on copper. I'm a bull on nickel. I'm a bull on zinc. I'm a bull on aluminium. I'm a bull on most of those main big metals. However, I like to see price action from a trade perspective. So here is where I think there is a buyer. We haven't seen them get down to that price yet. And it's similar for gold. Now, we'll go through oil, I guess, first. So let's go oil. And oil absolutely getting smashed. And I don't see it getting a little buyer here until at least 72 a barrel, 72.20 a barrel. We've had that bull zone there for a while. And as we talked about in that weekend video, look, the OPEC cuts, this is a political trade, okay? So basically what's happening is we've got really big push-pull techniques. From a TA perspective, we talked about, this level being a bull buy originally. We obviously got sold out here in terms of break-evens. We talked about this. We've done a lot of analysis on oil. And then we went to that confusion sell-off kind of concept. So we went to neutral sell. Now, the sell obviously completely went wild over the last 24 hours, and that's pushing down to the 72. Now, you don't have to say, I wish I sold it. It doesn't matter. What you need to do is you need to say, when do I have edge, and have the patience to enact and react upon those levels if you believe you have edge in those positions. So this thing is coming down like an absolute freight train. It's more than likely going to take a little bit to scale in, as in like even if it comes down to this level, it's still going to play some funny business for a little while. So I think it's a very key zone. I'm excited to talk about oil again as it blasts all the way down to 72.20 a barrel. And somewhere around here would be where I'd like to see the buyers recommit. So we're looking for that reaction. We're going to have patience, and we're going to update you on this one for sure. I'm getting a bit excited about that. All right, let's move over to gold. So gold was the one that I guess I saw in the comment section a few times. Yeah, I do read a lot of you guys' comments, so thank you very much for that. And yes, I do know there's a lot of spam in there. I report 20 to 30 a day. Unfortunately, it's a YouTube problem, so I try my best, but we'll see how we can update that. If you ever do see spam, report it. It does help us out to make sure we get rid of some of those very long threads that make no sense. It's always about somebody, and then it says at the end, like, Mrs. Hubbard, help me do this. Yeah, right. Don't click on them, guys. Don't click on them. All right, so gold. I saw the comments, and a lot of you guys were like, yeah, did you see it went up, didn't go down. Well, it went up because US dollar obviously dropped off. Now, do remember there's two things. Number one, if you're a medium to longer term holder, I am very bullish on gold and silver. Now, as a day trader perspective, you've got to look at it as when do you have edge. So would a market sell off from that point that we saw on the weekend? In general, I think yes, it would. And I still kind of maintain that we're not past the 23.63 zone. So we're not really past the worst of it necessarily yet. So there's a good chance that this still happens, or even this still happens, the 22.21.75 or the 22 here. I'm open to those plays. And that's because you've got to shake out the weak hands. Now, as an investor, I wouldn't be very terrified. But do remember, we first reported on this over here when we saw those extreme reads. And we thought, you know what? Time to take a chill pill on gold and wait for the next repeatable move. So that's where we find ourselves right now, in bearish neutrality. So basically, if you wanted to be a price action based trader, you would actually have to be mostly bearish at this point in time. If you take the higher timeframes into consideration, if you manage to break through this area, you would be very, very excited about being more bullish. And that's what you do. You wait for the key levels. That's the difference between, in my opinion, someone that's analyzing it, heavily or not. Now, we did actually cover this in our live stream we do every Monday, and I talked about this particular area here being actually bullish for the session. Now, the reason I said that is because it went down and then it broke towards the upside, and I didn't think it would pull back, and it didn't. So for the session was bullish. I expected it to get here, and this is where I expect the bear to come back in if they're going to do it. I'd love to see a 23.65 plus, but I don't know that that's going to happen just yet. So I would say neutral bearish on terms of the chart right now with what we see. What about NVIDIA? We discussed the idea, could we get an island reversal? Well, this is why, again, you have the patience. Did we see one? No. Are we still trapped within the range? Yes. Are we at an 1150, which basically is a call wall? Yes. Do we know what's going to happen next? Well, the trend is generally bullish, so you'd have to go with that. But I am getting those warning signs. I'm getting basically indicators telling me that this thing is a little bit overbought. And that just means as a trader, I'm a little concerned. Remember, it's one of my 3 pillar stocks. So as an investor, considering we expect AI infrastructure to go into a hyper bubble, am I concerned about this? No, I wouldn't be. And I think that, you just need to consider it from 2 different ways. So for now, the trend is still up. We're looking for signs of potentially being able to get cheaper price on the horizon, but I don't think it's like the most excellent time to buy it ever under that hood. Now let's move over to Tesla. So this thing absolutely sucks. And you can see why. 1, 2, 3 doji. So basically we are trapped within a zone. We keep getting above 180, keep being able to not stick it. You can just tell it's getting ready for a huge move. So Tesla will keep updating 180 plus or 182.50 plus close on the next 24 hours would be very bullish for this market. And we still think that there's buyers sitting around 170, 175. So that's the way that we're trapped at this stage. GameStop, well, I mentioned that we have some levels. Of course, there's the fill level, which is where we finished off the other day, 23.40. You would have to expect someone to be trying to buy off that. You'd also expect around anywhere in this zone, if there's going to be a buyer, they're going to try to pressure here because we saw 25 being that well-struck zone and, of course, 30 being a well-struck zone. Above 30, you instigate more possibilities of positive gamma. Now, if we have a look at where this could get to, I've been thinking about it a little bit with you guys, and obviously I think that there's a possibility it could do something like this, but I do think you'd have to be very, very careful in the 50 to 55 range. Now, if you were looking at pre-market action, it actually managed to get into that point pre-market and didn't, of course, be able to stick it because people sold. Otherwise, you wouldn't have that huge volume that went through. So, yeah, I think it's possible to get back up into these levels. Do remember it's a gamble. And anywhere in here is basically where you'd have to expect a buyer to try to recommit based on, basically greed and trying to get into that position. So we know where, I guess, Roaring Kitty has his positions and they're all sitting in this area in here. So we'll find out whether that's defended. Let's move over to China stocks now. HSI still not giving us a breakout. You'll notice that we've got 1, 2, 3, and 4 wicks at this stage. We're finding buy pressure around the 18.2 level. That's good, but it's not enough yet. So we'll update this chart when we get more information. Aussie 200 didn't manage to do the head and shoulders, and this actually is a pretty common thing that happens. So if you have a head and shoulders and it's going bearish, usually you'll only get about 2/3 of the move. And that seems to be all we've got here. So financials and a few other things helping the Aussie market kind of come back up. Same as the UK market. And we do expect both of these markets to do relatively well. I've said a few times, I think the Aussie market's going well over 8,000 over the next 6 months. So let's now take a look at the major US indices other than the S&P, and a lot of them do look fairly similar. The US 2K managed to take the 2090 zone. Obviously, it didn't manage to close above that, and then it sold straight off. Now, considering yields were down over the last 24 hours, you'd usually expect this market to bounce a little bit more. It failed to do so. Now, I will update a sentiment or kind of what generally happens over this period of year. But yeah, June, July, and August are usually actually quite bullish for the Russell 2K. So this is a very important hold for it. To hold above 2020 is going to be important. Obviously, we are looking towards a new high off the last 24 hours from the S&P to really instigate that. And this is an area where it's a bit of a battleground between the bulls and the bears. Basically, you want to hold that zone as much as possible. The US 100, the NASDAQ, actually shows something very similar, although it was a little bit more bullish on the session. So if we have a look, the pullback was fairly similar, ends up being pretty similar trade, but we noticed here that the supply wasn't taken out. So again, NASDAQ, we're going to need to see this broken through on this high. If that isn't happening, we don't have a new high from the S&P, then it's unlikely that we're going to be able to continue that positive gamma momentum, and it may act as a resistance. So very important we continue the momentum through the next 24 to 48 hours. What about Bitcoin? Well, good signs for it. We've been talking a lot about the idea that this is a great coil towards a 72 plus breakout, and it looks like it's trying to get on that way for that type of action. Remember, the coiling, the longer it coils, which is exactly what we expected, the longer or the better the chance the explosive move will come through, potentially pushing something like an 80,000 very, very quickly. That's the nature of Bitcoin. So long leg doji here, big closure, currently in bullish momentum. I would say it does look decent on the charts, and it could be going for that next big move. So Bitcoin certainly looking better than it has for a little while, and I like this consolidation. Remember, going down to coils may seem boring, but when it breaks out, it usually does it in quite a large way. As always, guys, if you enjoyed today's video, then make sure to subscribe. Remember, this Friday is non-farm payrolls, and we've gone through the economic calendar in our previous video. And if you're interested in finding out more about our shares, check us out next. And also, why not check out one of our courses, especially the last 24 hours. Probably would have paid for it in one hit. All right, thanks so much, everyone. Bye for now.